Hello everyone, my name is Michael Van Houten, and I'm here to provide you some coverage clarity. Today I'd like to talk to you about living benefits within your life insurance policy. Most people, when they get life insurance, the primary purpose of this is to provide financial support to their loved ones upon their passing. Maybe they want to cover some debts like pay off the mortgage or cover lost income or even pay for their children's education. The purpose is to provide financial support with the death benefit. However, to fully utilize your life insurance policy would be to completely understand the living benefits within it. Now, living benefits, in short, this is generally speaking when you're given a certain diagnosis. It might be a critical illness, a chronic condition, or maybe you need some long-term care as some examples. And what happens is you get access to a portion of your death benefit to help you while you're living, hence the term living benefits. These are called riders. Sometimes they're called add-ons, and it's important to understand that just because it says add-on doesn't mean that it's going to cost you money. They term it like this so that you understand the difference between the regular portion of the life insurance and the additional portions to it. And the reason this doesn't cost you anything in most cases is because the insurance company is using this as an enticement to get new business. That's simply put. And living benefits are an invaluable tool in covering things like medical expenses, lost income, or changes to your home. Maybe you have to make it wheelchair accessible, something like that. So the living benefits help you with the cost of this. Now, the first thing I'd like to talk to you about is accelerated death benefit, because this is the basic premise behind the living benefits. And this is when the policyholder receives a portion of the death benefit. In most cases, they're going to have a diagnosis where their life expectancy is between 12 and 24 months. And this pays out a percentage of the death benefit. Most cases, it's around 50%. Some policies, they pay upwards of 80%. And this is paid as a lump sum payment to you that you can use for anything that you see fit. Living expenses or treatment. Hey, maybe you want to buy a boat and go sail in the Caribbean for the rest of your life because, why not? You can still do that. It's your choice. And that's the main thing to remember behind accelerated death benefits. However, those aren't the only living benefits out there. Critical illness coverage. This is another pretty common living benefit to most life insurance policies. And when I say life insurance, it's important to point out I'm talking whole life insurance, not term life. Okay, term that just covers the death benefit over a given period of time that you arrange at the beginning of the term. But whole life insurance, that's where you build up cash value and have it in place for the rest of your life. Now, critical illness coverage. This is when you get diagnosed with something like cancer, heart attack, stroke, or anything else that's going to be critical to you, whether you're going to miss work for a long period of time while you're in treatment, or you can't go back to work at all. That's when this rider is activated. And this is, again, used as a lump sum payment that you can pay for whatever you wish. It's intended to pay for your treatment and recovery along with living expenses. That's the intention, but you could use it for whatever you wish. Now, what's going to happen is upon your diagnosis, you're going to file a claim with your insurance company, and they're going to review your medical records. They want to confirm the diagnosis before they pay out. And once that happens, like I said, it's a lump sum payment, It's typically pretty quick, because you need access to the funds to pay for your treatment. And then, it's important to also know that whatever benefit they pay out to you is deducted from your death benefit. So, in an example of you get diagnosed with cancer, the treatment's going to be $100,000, and your life insurance policy is $200,000. When you file that claim and receive that benefit, your life insurance policy then becomes $100,000. It's not like you're getting a free gift of $100,000 from the carrier, okay? So it's important to understand this. Chronic illness and long-term care. This is to provide financial support for your chronic illness. Again, like the other living benefits, this is where you access part of the death benefit and they pay out to you. Now with this, there's a couple of different criteria to be met in order to qualify for it. For a chronic illness, you need to be unable to perform 2 of the 6 activities of daily living. This would be things like bathing or cooking, walking. You're able to formulate a single train of thought. You're not like with dementia where you're unable to care for yourself because of the illness, okay? But you have to be able to not do 2 of the 6 of those. That's how you qualify for it. And then this provides financial relief for paying for the treatment, maintaining a quality of life. That's a really important thing, especially to your family. They don't want to see you go downhill and suffer, So that's where this is very important. Now with long-term care, it's very similar to chronic illness, except for the payment you have to use, in most cases, you have to use it for a qualified long-term care product. Think about this. Say you're 70 years old, you have a stroke, and you have to go to rehab for a couple weeks afterwards to learn how to talk again. So the rehab facility is a long-term care facility. The living benefits would help cover the expense of that, so you don't have to reach into your pocket. But you wouldn't be able to access these funds to pay for your normal living expenses while it's going on. So even though you're in the rehab facility, you can't use the funds to help pay your mortgage. And that's the big difference between long-term care rider and the critical illness rider. And I wanted to point that out to you. Disability waiver of premium. This is a living benefit that's designed to protect the policyholder in the event of a disability. And what happens is, if you're disabled for whatever reason, there's going to be a waiting period for your life insurance. Sometimes they're 90 days, sometimes it's 180 days. Once you get past that waiting period, the life insurance carrier is going to waive your premiums, as the rider suggests. And the purpose of this is to make sure that the policy stays in force while you're disabled. Not all disabilities are going to be a permanent long-term thing, but if that's the case, then your premium is, you don't have to pay it. But if you go back to work, if you return to your normal life a year later, 2 years later, maybe you had an accident, then once that happens, you're going to have to start paying the premium again. And at the point where you start paying it again is going to vary from carrier to carrier. So I don't want to misspeak on one and you end up having a different carrier, and so I don't want to cause conflict. But the general premise is, its main feature with this is to keep the life insurance policy in place. Because if you're disabled and you're lapsed in life insurance, that means in order to get a new life insurance policy, you're going to have to go back through underwriting. And it's going to be more expensive just because you've been disabled, you're older, you're less healthy, and in a lot of cases, you might not even be able to get life insurance again. So this is why it's important to have this rider on your policy. Now, other living benefits that are associated with certain life insurance policies. I've seen, now these are not common in everyone, okay? These are just miscellaneous ones, as I like to call it. I've seen it in Alzheimer's rider, so that if you're diagnosed with that or dementia, then you receive access to the death benefit to help pay for the care with that. I've also seen fertility riders as a living benefit for women, especially between their late 20s and 40s. If for whatever reason you're unable to get pregnant, this living benefit would help you pay for fertility, whatever the case might be for what your specific needs are. They'd help you cover the cost for that. So living benefits are very, very versatile, and they're going to vary from carrier to carrier. So it's important to do your research and talk with a licensed life insurance agent about that. So it's also important to point out there's going to be limitations and additional underwriting for these living benefits depending on which carrier you go through. For example, myself having fibromyalgia, with my IUL, I don't have access to the chronic illness rider for the living benefits, which is okay, but I still have access to most of the other riders that I mentioned in this video. So even if you don't qualify for one, you still qualify for others, and that's important to remember. If you already have life insurance in place, then speak with your agent about these living benefits so that you can learn more about it, or review your contract that they sent you in the mail. Now, in the meantime, if you have any questions, feel free to reach out to me. Until next week, I hope you have a wonderful time.